Okay, what is going on, Mego team? Welcome back to our channel. Thanks for tuning into today's video. We have a really exciting video today. We've got a lot of stuff to cover. We're talking about the bullish versus the bearish scenario. A whole overview. We're going to take a couple minutes, maybe 10 or 15 minutes to talk about the bullish scenarios, and then 10 or 15 minutes to talk about the bearish scenarios. In between, we're going to be talking about the DXY, the total cryptocurrency market cap, the Bitcoin dominance, looking over a couple of different Bitcoin charts to explain our positions, talking about a few other things, and answering a couple community questions at the end of the video. If you have any questions about today's video, leave them in the comments below. If you want to find me on Twitter and Telegram, you can do that in the pinned comment down below. Let's get started. So guys, as always, we're going to start on the macro, then break it down to the small time frame. We're going to go ahead and start on this chart. We're starting with the bullish case scenarios. And first and foremost, guys, I do want to pinpoint on this chart that we actually have found a new potential support. If we go ahead and copy this line over and draw it directly up, retesting, we can see that we have a few areas of support here. We have support back over here. We have a lot of support and resistance throughout this range on this zone over here. We have support retest on this level here on the 17th of April, and then pushing upwards, we have support again over here, and once again support. This is one indication that we could potentially be seeing a bottom in. We could be seeing that bottom formation. And a lot of people are saying, oh, Mega, we didn't hit 24K. Well, actually, we did reach 24K. We reached 24K on the Bitcoin USDC chart. And if we go ahead and take a look at my original prediction, we can see, I'm going to go up and scroll up to it. We can see that my original prediction was always 24 to 26K as of the 16th of November. 24 was just that lower level that we were talking about. But you can see we had this, always had this demand zone at 24K. So considering we predicted this 6 months in advance, I think we did an excellent job. But nonetheless, we're talking about the bullish, we're talking about the bearish scenarios, and today we're starting with the bullish. So firstly, if we go ahead and take the Bitcoin chart in an inverted scale, and we go ahead and put it on the log scale as well, we get something like this. And we can see we have this major support resistance zone over here. And I'm just gonna go ahead and shade that in. We can see it comes all the way down, cool. And we have this descending trend line. So it's descending trend line of support as well as this descending trend line of resistance, and it's converging. So already from this, we know that we are seeing something called a falling wedge, or you could also call it a descending wedge. And we know descending wedges are bullish patterns. We know that they have breakouts to the top side eventually. So if we're taking a look at this scenario, this is in favor of a bearish pattern, but we are talking about the bullish scenario. So Mega, what the hell are you getting onto? Well, according to falling wedges, according to a market pattern theory, we need at least, I'm going to go ahead and show you what a falling wedge looks like. We need 3 retests on one side before we get that breakout. Now, what I do want to come and say over here, we only have 2 actual retests of this trend line. So there is a possibility that this trend line could be retested again. We could see some kind of drop down from resistance retest before we head back up. That is definitely a possibility. Now, I'm definitely not saying any of this is going to happen. We're going to get into our own opinions and my overall analysis of what I think is going to happen at the end of the video. Of course, we go through all the data first, we take a look at everything, and only at the end we come to our opinion. This is just one bit of evidence, one bit of data that we are supporting for that bullish scenario. Now, on the flip side, guys, we have to be aware of a few things. First off, if we go ahead and take a look at this chart and we draw a horizontal line, and we'll come back to this in a bearish scenario, we've lost this major neckline. And this is our neckline of this whole entire range from the January 2021. We have dropped below that neckline. Obviously not a good thing. We need to get back above that neckline for us to kind of push downwards again and be bullish. I also want to point out that according to market pattern theory, it doesn't matter which side of the channel you have your retest, because you can have more than 5 in total. So this is assuming you have 5, but you could have 3 on the top side. So you could see something like this. I'm going to go ahead and delete this and show you what I mean. You could have something like this: 1, 2, 3, 4, 5, up. You could have something like that, right? That's 3 retests of the top side, 2 retests of the bottom side. And we're potentially seeing something like that. We have our 1, 2, 3, 4, 5. We could retrace here and push upwards. If we push upwards, of course, that would be bearish. So although this chart can show potential inklings towards a bullish scenario on the macro, it does also show bearish potential because the falling wedge is bearish. So we have to keep that in mind, although we're talking about the bullish scenario. Going back to this chart over here, we have, where is it? Here it is. A very convincing and very strong retest of this support zone. And we have to assume now that this is going to be a very major support. And I would say no doubt about it that this 24 to 26k zone, as we talked about in that Telegram post way back on the 16th of November, I'm going to go ahead and bring it up. You can see we did a whole analysis on this over here. We can see that this was always going to act as a major support. And we knew it was going to act as a major support because all we had to do was take a look at this previous zone. If we go ahead and draw it in here, if we just take a look at this previous zone over here, and then we just go ahead and look at that. There it is, something like that. There we go. And we can go ahead and draw these zones upwards over here again and down over here. We knew this zone was acting as a major support zone. So there's no doubt that we wouldn't come and retest this area. It was very obvious we were going to come down and retest it, but it looks like we have bounced from that area. And I do want to talk a little bit about that on the short-term time frame, what it means that we've bounced from here, where the price actually needs to go on the short term for us to technically flip this trend and be bullish. Because at the moment, this is nothing more than a bounce. It doesn't mean that the price can't drop lower. And we'll come back and talk about, the price dropping lower when we discuss our bearish case scenarios. So moving on to this chart, we have a descending channel. And this is our Bitcoin chart USD pair on Bitstamp. And we can see that we have two merging descending channels. And I want you to just imagine those dotted lines aren't there right now. So we have this descending channel between what we see, this solid line and this solid line, all right? So there's our descending channel. So the descending channel is suggesting that we are gonna see a push back to this top line over here, which is sitting around $40,000. And that is a potential, And we're gonna go ahead and take a look at this on another chart in a second and give it some more accurate targets. But the more precise target is actually around 35 to 36. But this is indicating that we can see a retest of this downward sloping resistance before we break upwards. And of course, that will be a bullish case scenario. I do wanna pinpoint this dotted line. Now, if we take a look at the chart, we have these two descending black trend lines, then we have these two descending black dotted lines, and they're slightly to the left, they're slightly off-centered. But we can see how these dotted trend lines are acting as zones of either purchasing, so purchasing or selling. And we can see that it's happening again over here. This trend line, we have a purchase, and then we're looking to sell within this trend line. So we can suggest that buying now would be not too bad, and selling when you're up in these dotted trend lines would be a potential option. So that is suggesting a bullish case scenario. Of course, everything we've talked about so far is only market structure analysis. We're going to go ahead and take a look at the technical analysis for the bullish and bearish together at the end of our market analysis for our bullish and bearish scenarios. So we'll go through the technicals and we'll try to confirm or disprove any of this stuff we're talking about. So back to this chart over here, our main Bitcoin chart. This is our favorite, our main chart over here. We can see that we have actually closed a daily candle above $31,000. And I talked a little bit about the implications of that on Twitter. And I said that if we close a daily candle above 31,000, there's a good chance we could see a push upwards to 35.36, which is this gray zone over here. The problem with that right now is that although according to this market structure, this would technically flip, we do have a lot of resistance above us. And we're going to go ahead, and I don't really want to talk about the bearish stuff quite yet. We'll come back and talk about that in the bearish scenario. But just to say the bullish scenario, if we can see that flip and get this current daily candle up, we could see a target around 35.36, and that confirms that target which we just talked about in the previous section. That 35.36k zone is that next major horizontal resistance. So guys, that is about it for a bullish scenario. If we take a look at the macro and the small time frames, of course, there's nothing else I really want to pinpoint. I think the only piece of bullish evidence we have right now is that we've bounced from a very major support zone on that Brave New Coin Liquid Index chart, and that we have a potential retracement from this falling wedge chart that could occur. And if you can see this trend line on that falling wedge kind of lines up with that same trend line we have on that Brave New Coin Liquid Index chart. So another piece of common data that can suggest a bounce here. So before we go ahead and get into our our bearish macro argument, then we're going to go and talk about, after our technical analysis, then we'll talk about the total cryptocurrency market cap, Bitcoin dominance, DXY, then we'll answer community questions. Before we do that, I do want to quickly take some time to talk about our Crypto Academy. And the Crypto Academy course, Become a Trader, is actually launching officially in, let me take a look, in about 5 hours and 50 minutes, so 5 p.m. Australian GMT time. So today it's launching. We have 10 topics with over 450 slides, 85 full videos, 10 worksheets. We teach you everything from the fundamental concepts of risk management, investing strategies and tools. We go through all basic market patterns, technical indicators, bullish candlestick patterns, bearish candlestick patterns. We teach you how to utilize, identify, and trade them. We teach you profitable mindsets. We talk a little bit about market psychology. We go into advanced risk management, and most importantly, we teach you how to trade. We teach you how to find trades, how to execute trades, how to manipulate your positions to alter your risk management or your potential profits. If you're interested, we have our pre-order discount expiring in 5.5 hours. Contact us via email. Okay guys, so back into it. We're going to talk about the bearish case scenarios now. So obviously we talked a fair bit about the bearish case scenarios, and we'll come back and talk about the technicals and what we actually need to see on the short-term time frame to be bullish again. But the bearish case scenarios is, of course, that we come down again, we lose this support zone now, because we've identified this new support zone here. We daily candle close below the support line, and we will see a retest of this zone down here. It is literally as simple as that now. There's not much more to it. It is very simple what is going to happen. We've identified a new structural support, which is this zone over here. This is lining up to around 25,500 right now. And that 25,500 level is acting as a major diagonal support. If we lose that diagonal support, we come down, we retest, and probably the weekly close above that 200 moving average, but we're going to get a wick down into this zone. We're going to talk at the end of the video again what I will be doing, how I'm looking at trading, how I'm looking at purchasing all this at the end of the video. Right now is a bearish case scenario, of course. So that is our first bit of bearish evidence. The second bit of bearish evidence is that if we go to that daily chart, actually we'll go to the 3-day chart on our main Bitcoin chart, and we take a look at where the price actually currently is. We've kind of showed a little bit of weakness dropping below. There's a major support zone around 29,000 to 30,000. If we take into consideration that weekly chart, we can see the price is forming new lows. And of course, our previous high with our wick, or our previous low of our wick, was sitting around this level here. We're going to go ahead and draw it in, 31,850. And we can see on the chart over here, we have this major support resistance zone between that 31,000 and 31,850. So I'm going to revise my statement according to that bullish scenario. For us to be bullish, we do need to break, well, for us to have short-term chance of pushing back upwards to 35, 36, we do need to actually clear this weekly candle low. All right. Other than that, we are looking bearish. Our targets are $24,000, $19,000, $12,000. We're not going to go through how we came up with those. We've already done that 100 times. We're going to go into the total cryptocurrency market cap. So we can see the total cryptocurrency market cap is representing a similar position to what Bitcoin and our standard Bitcoin chart is showing us. It's showing us a retest of this previous low that we formed in July 2021. And that is acting as a major support. If we go ahead and remember back to our Brave New Coin Liquid Index chart, it's kind of acting as a major support around that zone here. So if we lose this level, we're going to be losing that Brave New Coin Liquid Index long-term support line. We're going to be losing this diagonal support line on our Bitstamp chart, and we're going to be losing the support range on our standard chart, which will send us downwards, guys, even further back to 24K. All right. So the bearish scenario for Bitcoin on the charts isn't looking very favorable. It is looking quite strong, should I say. It is looking quite strong. If we go ahead and take a look at this chart, for example, we see that according to our historical data or our historical trend lines for Bitcoin, or what we see in the past when it comes to price action, we always see a 7-day candle or multiple 7-day candles below this trend line. All right, every time we bottom out, we see these candles below the trend line. Now, the one thing I do want to kind of bring up, and this is one thing I've been thinking about quite a fair bit, is what if COVID-19 didn't occur? Would we have seen any candles below this trend line in the period between 2018 to 2020? Would the bottom have actually occurred above, slightly above this trend line? And if the COVID-19 crash didn't occur, what would that say for this scenario here? And what would that say for this scenario here? Well, right now, since this actually did occur, and we actually did crash down, we have two data points. We have data points here, and we have data points over here to confirm that the price in both scenarios, in both bear markets, have come down below this trend line, supporting the fact that we believe that the price will actually do that again. But if we eliminate this black swan event, and I don't like to eliminate data, but for example, if we eliminated that black swan event, we only have one data point below this trend line, one group of data points, should we say, and we have one scenario we didn't. So it leaves up to a little bit more speculation around this time as whether or not we're actually going to go down below it or stay above it. So that is something to consider. But then again, you have to bring into consideration interest rates. And interest rates are rising. And DXY has broken out of a 21 year long downtrend symmetrical triangle. It is going to be pushing higher. We've talked a lot about this already, but we have a period where inflation was very high. Therefore, the government decided, all right, let's bump up interest rates. If we bump up interest rates, we can try counteract the impact on the economy due to rising inflation and rising cost of goods. Hopefully, if we bring up the interest rates, cost of goods will decrease, inflation will decrease, and we'll have more money to spend at UCT. But in a situation now where inflation has continued to rise, we're at 8.6% according to the last inflationary data in America, and that's a conservative prediction. And we've had interest rates rise about 3 times now, and it's not decreasing the inflation. So we're in a scenario where interest rates are rising, inflation is rising, cost of goods are increasing, interest on debt continues to rise as interest rates rise. This results in household expenditure increasing, household available cash decreasing, therefore they can spend less money on things they need. They have to spend more money towards their debt obligations, they have less money to spend, therefore the demand and supply balances of cost of goods continue to change or continue to fall, and therefore cost of goods even rise further. We also have a scenario where households are less likely to invest in risk assets, as less available cash flow equals less investment risk and less investment opportunity. Therefore, people are more likely to be selling their risk assets or unleveraging themselves from their risk assets, dropping the asset prices. If you take a look at companies can acquire residential properties in Australia. All companies have been, and all companies, I'm saying all companies have been acquiring risk assets upon debt in the last few years. They've been utilizing debt at a low credit to acquire assets. These assets increase the company's cash flow evaluations, increase their future earnings, and therefore makes their share price look more profitable as their dividend payouts increase. This is half the reason why the stock market has pumped so much. All right, the stock market has pumped so much because of that exact reason. They've taken more assets, companies, they're taking those assets on debt, therefore their future earnings increase, therefore their cash flows increase, therefore their dividend payouts increase, therefore their stock price increases because people are willing to pay more for the premiums. All right, and the stock prices have increased so much. Now, interest on debts is rising. These companies now have to pay off more cash towards these debt obligations, and has that reverse effect. Their future earnings decrease, their cash flow decrease, the debt obligations increase, their share price decreases as dividend payout ratios decrease, and investors are now asking for higher premiums. So it is the opposite. And what effect does that have on the global economy? Well, it exacerbates the cost of goods rising, it exacerbates retail selling assets, and it results in a scenario where companies are offloading their risk assets, which decreases the price of risk assets, such as cryptocurrency. And that is half the reason why we've seen cryptocurrency drop so much. There's pretty much the entire reason why we've seen the share market drop so much and other financial markets take a hit. And that is one of the reasons why we believe that the Bitcoin price will continue downwards because of this. The global economic situation makes a big difference. And if we go ahead and remember back to our prediction, we didn't predict Bitcoin to crash this soon. Just because Bitcoin has come down now and pumps a little bit, it doesn't mean that the bearish scenario isn't still in play. I think people have to remember that. We are technically bearish, and we're going to go back to the chart. We are technically bearish, all right, until we have a break over 2 things. We're going to show you on the chart over here. Let's go ahead and change this. Number 1, we need a break over the 100-day moving average, the purple line on the short-term time frame. If we get a break over the 100-day moving average, this will propel us back up to the 200. If we break the 200 and clear this high, all right, we are bullish. That is when we're macro bullish, not a second sooner. All right, we have a super strong neckline here. This gray box is a very strong neckline. If we can clear that neckline, we shoot upwards. If we shoot upwards, we are bullish, all right? That is when we are technically, according to technical analysis, according to data, we are technically bullish. Until then, we are bearish. It does not matter, guys. If the price does this, This move doesn't make us bullish. This move means we're seeing a push upwards and we're short-term bullish, but we're not bullish overall. The market is not bullish. So do not get caught up in the fact that yes, we can push higher here. Yes, if we push higher, we're taking advantage, we're trading it, we're capitalizing on it. Yes, we're in the market, good, we're making money. But no, we are not macro bullish until those things occur. Do not get those confused. People will try and make you confused. People are going to try trick you, and people are going to make it very, very colluded, and they're going to make it seem as they are both the same. They are not the same. There's a very big difference between being bullish on the macro and bullish on the short term. All right, guys, remember and make sure you keep that in mind. So that's about it for our bearish scenarios. I do actually want to talk about one more thing, which is the Bitcoin dominance chart. And that is that if the Bitcoin dominance chart continues to rise, and we told you guys, we're going to see a breakout. We told you down over here. We told you we're going to see a breakout. We saw a breakout. And if Bitcoin dominance continues to rise, altcoins will get hammered. Our target for that is around 49%. And if that happens, altcoins will bleed a lot more. So obviously keep that in mind and stay safe. We're going to go ahead and quickly talk about VIP. And then we're going to go ahead and do our macro technical analysis, talking about a 7-day, talking about the 3-day to 1-day and the short-term time frame, to try give you guys a little bit of a scope on, you know, what's more probable. So we talked a little bit about, well, we talked a lot now about the bullish and the bearish scenarios, talked about where the price could go either direction. But now we need to come to a technical understanding of where the price is going to go, because on a macro standpoint, from a macro standpoint, it is looking more bearish, but we do have bullish potential. From an economic standpoint, it is looking more bearish, but of course we do have the potential of a relief rally. And then of course, from a technical standpoint, we need to come to a decision on that. Our stance before this video was bearish. It may change, we haven't looked. We're going to do analysis and find out. So before we get into that, I do want to quickly talk about our VIP channel, and we can see our VIP channel is over here. We have, I'm just going to zoom up on the screen. We have over 400 members now, which is amazing. And if you're interested in VIP, you can contact us in the comment section down below. There should be a pinned comment with the link to VIP. You can see we do a bunch of trade signals over here. We've had some significant profits in the last few days, which is really nice. We do much more than trade signals though. We give market updates, we give advice, we give opinions, I'll post our videos over here, a whole range of exclusive market updates. You can see a lot of profits over here, which is nice to see. And you can have a look at our monthly profits in the free channel. If you head to the free channel, you can see our cumulative monthly profits for each month. This was our last month. And then you can see our summary for the year. Every single month we've had significant profits. If you're interested, contact us down in the comment section below. It'll be great to have you part of the team. Okay, so now we're going to get straight into our technical analysis. We're going to go through a 7-day to start with. So starting with the Ichimoku cloud, we can see that the Ichimoku cloud is looking considerably bearish here. Of course, we have a drop down below the clouds. The Ichimoku cloud lagging span is below the clouds. We're below the conversion line and the baseline. It is not looking very good on the weekly. We can see the last time something like this occurred was around this point in the 18th of April in 2018. We saw that the price was below the clouds. We saw a lagging spanning only recently broke below the clouds. This initial drop over here on this little bump. We saw a little bump over here, and we saw a little bit of a push upwards, not too much, only to crash back down lower. So taking a look at this, guys, this is really important. We're going to go ahead and zoom up. So we're going to see a fractal or some kind of commonality between these 2 points, which is this point here and this point here. And we already know that the lagging span is 26 periods behind the price action. Take a look at this. Look at this huge drop, this candle here. Look at this huge drop. Take a look at that next candle. All right, it's a little green candle. Take a look at this candle, little green candle. And look at that lagging span. We know we have a support here. If the lagging span drops below the support and the price drops below that support, we could see a push downwards here to that 200 once again, to retest it once again on this Brave New Coin Liquidnex chart. We could be seeing some kind of bottom formation like this. We could see a bottom sooner than expected. And like my prediction said, I expect a bottom within July. So we're still a little bit off July. July is over in this period here. So we can see a push downwards, a bleed into the bottom before we push upwards. All right, that is a real possibility. So the Ichimoku cloud, of course, isn't looking very good, but it is, or it just did show us a sign that we could actually see lower prices here. Bull market support band. Not much to say here, guys. Obviously, it's looking very bearish. It's not looking very good. I do want to say one thing. According to our market structure analysis, we are closer to the bottom than we are to the top. All right, we're closer to the bottom than we are to the top. If you survive this far, you've survived the majority of the crash. For altcoins, it's a different story. Altcoins can drop a lot more. Bitcoin, you've survived the majority of the crash. Now, if we, however, lose this level here, we could see lower targets of $17,000, $18,000, and even $12,000. That's the story for another time, though. That's the story for another time. All right, Gaussian channel isn't looking very good, and we told you about the Gaussian channel. I'm going to go ahead and show you where we told you about the Gaussian channel. We talked about the Gaussian channel so long ago, guys. This is one of the indicators we actually utilize to predict the bottom. If we take a look over here, we can see we utilize the Gaussian channel over here, saying that as we can see, the Gaussian channel is providing some strong support for Bitcoin in recent months. If Bitcoin fails to hold the 50 SMA on the weekly, the price will enter the Gaussian channel. This is what will happen. This was the 2018 scenario. This was the 2014 scenario. Look at this. I said both instances of the weekly chart where the price enters a Gaussian channel, we enter a full-blown bear market until we find support around the 200-day moving average on the weekly chart. All right, that was posted when the price was over here at the start of December. Look how accurate that has been. Look how precise that has been. We've seen the price drop down through the Gaussian channel, down below, until we find support on the 200-day moving average. All right, down below, support 200-day moving average. Going back to 2014, down below, support 200-day moving average. All right, we were talking about the Gaussian channel before people were even bearish. We were talking about the Gaussian channel before people even knew what it was. All right, so the Gaussian channel is one of my favorite indicators, and I know a lot of other people use it now. I introduced Wolves of Crypto to the Gaussian channel. He loves the Gaussian channel now. It's a very strong indicator to predict macro trends and macro reversals. And it's going to be one of those indicators I'm going to use to predict when I should be going heavier into the market. When I see that Gaussian channel flip, and what I mean by flip is when I see that price re-enter that Gaussian channel and find support within that Gaussian channel, I'll be looking to look for more aggressive plays. We can see a few instances of that on that weekly. And this is why it's important, because entering is not enough. We need to flip it. We need to find support within it, all right? And we can see a push back to the top side. We'll see a push back upwards and through, okay? So Gaussian channel looking bearish, but it is looking full of potential and has perfectly helped us predict exactly what has happened. And honestly, I'm very impressed with the Gaussian channel, and I highly recommend that you guys go ahead and learn how to use it. It's incredible. It's an incredible technical tool. The next one we do want to talk about is let's go ahead and take a look at the RSI actually next. So the RSI is looking at, it's not looking great, guys. Of course, we have dropped below about 34.34 on RSI, and we talked a lot about the 34.34 on RSI before, and that has indicated a very strong level of support. And we talked a lot about it in the last video, and we had one individual ask us, hey, Mega Whale, is it not that the price falls and then the RSI falls through it because of it? And I answered in a way that I said, went along the lines of this. The RSI doesn't represent price action in the sense that it doesn't show us exactly what is happening on the charts. It moves in a slightly different way, but it represents volume. And what is volume? Well, it's velocity and speed of price movement. That is what, momentum. It represents momentum. Momentum is velocity and speed of price movements. That's what it represents. So it doesn't have a one-to-one ratio in regards to price movements. And we can see it on chart. It doesn't show that. That's not what it shows. And therefore, we can't assume that because the price drops levels or moves, the RSI is going to. It's the other way around. The RSI can be utilized to predict price movements as price requires momentum to move. All right. If there's a lot of momentum, the price will move. Therefore, when the momentum levels drop below long-term structural support levels, we know that there's been a significant shift in momentum. And where there's a shift in momentum, we eventually see the price move in that direction. So if we see a shift downwards in negative, so we've dropped major horizontal levels like we did over here, 34.34, we could indicate that the price was going to see a significant drop within the periods to come, very soon after. And it did. It dropped all the way down from $36,000 to $24,000. All right. And just as we can use it on the downside, you can use it on the top side. If we break this downward sloping resistance, we can confirm that even before the price moves upwards significantly, that a upward swing will come because momentum has shifted. That is how powerful of a tool it is. Let's drop to the 3-day chart and go through the same things. So starting on the Ichimoku cloud again. And I don't really want to go through it too much on the Ichimoku cloud because it's more or less going to show us kind of the same things here. We're just going to quickly run through it. It's more or less showing us the same thing. That major horizontal support level acting as a good resistance. We can see that same thing happening over here. We had a small little bounce on it before we kind of bleed slowly back down. And I do want to say that I think the major crash is behind us. I think any crash from now will be a bleed downwards, similar to what we saw here, similar to what we saw here. I do not think we're going to see a COVID style crash or a crash like we saw over here again. I think the significant drop has happened. The significant drop has happened. It will bleed slowly from here on outwards. Really important that you understand that. Significant drop, done, bleed slowly from here on outwards, all right? It will help you understand what to do. So, moving on from that, guys, Gaussian channel, same thing. We're not going to go over too much. It's telling us exactly the same thing. It's just moved down to a smaller time frame. And all the other indicators are going to be telling us the same thing on a smaller time frame. Let's go ahead and take a look at this small time frame on the daily, because this is where we're more interested in right now. So we take a look at the RSI and we can see that we had a break back above this major support zone. And yes, we did break that 31,000, and we just revised that a couple minutes ago. I think about 10 minutes ago, we revised that, saying that we do actually need to break above this range on a daily candle to see it push higher. And we identified this because we had that weekly weekly close price on the 21st of July at the 31,850, meaning that this is acting as a strong resistance. Until then, this is still very much possibly a fake out, and we can see a price drop lower. And I think that is going to occur because we broke upwards, but again, we didn't have the momentum. Notice how the RSI is still below this downward sloping resistance. The momentum is not with us. We don't have that momentum. Coming off all of our analysis so far and what we've talked about, I think it's very clear. I think it's abundantly clear the price is still very much in a downtrend. I think it's abundantly clear that we are still very much bearish. I think we've talked about our invalidation points, which are these points here. If we can flip these, we can become short-term bullish up to this level here. We've talked a lot about how you shouldn't be bullish on a macro standpoint until we meet our actual bullish targets, which is that 100-day moving average, 200-day moving average, and that local high on that daily chart on Bitcoin around 48,000. And we talked a little bit about our bearish targets and why we think that's going to occur. So guys, we're going to go through our community questions next. If you do have any questions that you want submitted for the next video, leave them in the comments below. I know today's been a long video, and if you're still sticking around, thanks for sticking around. It's honestly, my mouth is getting dry. It's been a lot of talking. It's really hot here in Queensland today, particularly in my house. It gets quite warm. So thanks for sticking around, guys. We're going to go ahead and quickly talk about BitGet, and then we're going to go through our community questions. I wanted to quickly introduce my new favorite exchange, BitGet. BitGet is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. BitGet has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. Okay, so the first community question is from Roma. Thanks for submitting your question, Roma. Your question is, what is the current strategy, or what is my current strategy when there is blood on the streets? And I assume you mean blood on the streets, meaning when we're in a bear market. That's the scope I'm going to kind of answer your question from. And I'm also going to answer it from the scope of what my strategy is when the market's completely tanking. So from a bear market standpoint, I'll leave this question down in the corner so everyone can see it. From a bear market, oh, that didn't work. Anyway, from the bear market strategy, my standpoint is to basically sell out to 100% USDT or USDC or some other stablecoin or even my fiat currency. And I did that ever since we got that Gaussian channel on the 16th of November. I've been entirely out of the market since then, in the sense that I'm not out of the market, I'm out of holding. I do not hold anything. And our VIP channel are the same. We're not holding anything. We are still trading. We have still been trading. We have traded every single month. We have traded this entire time. And we're taking about 10% of our total capital per trade maximum. All right, we're trading with 10% of our total capital per trade, absolute maximum, with a small stop loss, all right, or a very tight stop loss. And you can see, if you want to go have a look at how that's actually played out for us, we'll show you. It's turned out really well. These are our results. April, we did over 400%. March, we did 362%, 19 wins, 4 losses. February, 329%. All right, so it works. You can definitely trade the bear market and the downtrend, but you need to know what you're doing. You can't just jump in and hope for the best. And that is why I say, if you are unsure, or if you're a new investor to the space, or you're not a good trader, or you're not even experienced, your best bet is to trade the trend. When the market is down, stay away. Don't touch it. Wait. When the market is up, jump in. And it doesn't mean short-term up. We're talking bullish. When the macro structures turn bullish again, you can enter the market. Money's easy to make. When the macro structures are bearish like they are now, money is much harder to make. It is hard to make money. It's easy to lose money. All right, the trend is downwards. So what is my strategy when the blood is in the streets? For me personally, and for my followers, I scalp trade. I only scalp trade. I don't swing trade. I don't long-term hold. I only scalp trade. What is my strategy when the market's absolutely tanking? Well, I don't hold anything, of course. So when we saw something like we saw the other day, absolutely tanked, I'm not holding anything. I'm putting bids at very low prices. I'm hoping to get filled at low prices for some potential scalps. Other than that, I'm just waiting it out. All right. Next question. So the next question is from Mr. Grumpy One. He says, I'm rather new to crypto world, more or less 1 year. What would you invest in, Bitcoin or altcoins at the bottom, or both? So let's go ahead and answer that question. We've already done this question a few times. We'll answer it again. We take a look at the past performance of Bitcoin and altcoins in the previous bull market. We can see that from this bottom, and we're going to go ahead and show you this green line on the left is the same time period as this green line on the left. So from the absolute bottom for Bitcoin, which is around here, we saw up until this first level, 17th of January. So we'll go to the 7th of January. We saw a move of around 900+%. It was at around 11-12x. All right. For altcoins though, we only saw a 554% move. Only. Look at me talk. That's significant. 554% is great, but in comparison to Bitcoin, it's quite small, right? It's about half. So in that first wave of that bull market, in that first bounce, that first initial rally, Bitcoin does take the market share. All right, Bitcoin takes the majority. Bitcoin will move much more than altcoins. Therefore, at the start of the bull market, most of your money should be in Bitcoin. You should be investing most of your money in Bitcoin. And I said this again, about 50% of your money in Bitcoin, about 20% in altcoins, and the rest you should keep on the sidelines to trade with. All right, you should always have money on the sideline to either dollar cost averaging, to buy more, or to trade in a bull market. And then we take a look. After that point though, when Bitcoin drops, the altcoins rally 393%, where Bitcoin only rallies from that bottom a little bit over 112. So then in that second half and in the later half of the bull market, after that first initial rally, altcoins take the pedestal. They kind of take those majority of gains, and that stays relevant up until the market crash, up until when we enter a bear market again. That statement is relevant. Altcoins take the dominance. Okay, guys? So I hope that answered your question. And guys, if you want any questions submitted, remember, leave them down in the comments below of this video. Thanks for tuning in. Quite a long video, but I hope you all enjoyed. Cheers.